Begin again.
Good afternoon, tackle traders, and hello, YouTube. This is Frank coming to you with the recap for the 18th. It is Thursday. Sellers came back in today. Volatility remains high for sure. And we are, of course, smack dab in the middle of earnings season. So quickly looking ahead to the earnings for tomorrow to be keeping an eye out for. Here you have the S&P 500 companies reporting here today. ISRG, PayPal, American Express, E-Trade, People's United. So some fairly big names in the posting here this afternoon after the market closed. And of course, tomorrow before the open, another pretty heavy slate as we have things like KC Southern, Schlumberger, Honeywell. So another big day of earnings going into tomorrow as we kind of continue to work through this earnings season. Taking a look at the day that was in the market, it was volatile, as we probably have expected. The volatility just doesn't disappear overnight, whether you'd like it to or not. Probably depends on you, right? Some traders are loving this volatility, others not so much. S&P briefly broke its 200-day moving average for whatever that's worth. We did kind of rally up off of the low of the day to kind of close on the right side. We're very responsive, no really huge surprise. And we've been really responsive to 15-minute time frames. Kind of something I've been noticing in the broad market and stocks in general. We pulled back to that old 2780, and I just moved this line here, so it's already straight. And of course, that falters. We have immediately a sell-off of that 15-minute breakdown, rally up to that, and another drop. We can continue, and I think we probably should continue to watch that area. But honestly, in a market like this, from a buy side, I'm always going to want to be making sure I'm breaking some resistance. So, but we do, of course, know that, we have a little bit of resistance, in the form of yesterday's high. We're kind of smack dab in the middle of our current levels of support and resistance, which makes it tough for directional traders on maybe daily time frames. But again, it's been pretty interesting on the intraday time frames. A lot of selling. NASDAQ definitely performed poorly here today. Selling pretty much from open to close. I did catch the intraday lows and rally up a little bit, but nothing too substantial. As we continue to have that resistance, again, all of our markets, maybe not the Russell, but our other indexes are really kind of somewhere smack dab in the middle of the resistance that we're working with now and the support level. So continue some, I would expect to continue to have volatility as we move into next week, certainly as we move into tomorrow. Same situation over on the Dow Jones. Again, we talked about this. We thought it was a good chance it was going to happen. Once intraday started to show some bearish signals and those day traders started trading bearish instead of bullish, all of the, what if you want to call optimism, it's probably a bold statement, but the bulls really were nowhere to be found as selling persisted here today. Russell definitely looking the ugliest to me. I don't think any of us here are surprised. It was probably the cleanest technical setup in the form of testing the breakdown point. We saw some weakness yesterday, moving downward here today, and of course, closing pretty bearish as we continue to use that breakdown point as our probably major level of resistance. Obviously, until we break some resistance, I'm not touching anything like that. That's for sure. As we shift gears over into our different sectors, continue to hang by maybe a thread at support over on the material sector. As we've looked at before, there's really not a lot of support on some of these things. If they break this current level that they're kind of hanging around, there is some more downside potential, at least in my opinion, no real support levels to hold it up. Obviously, you don't break until you break, but we are on the closer end of breaking right now. We're at those lows in the materials. Very similar situation, a little bit of a different looking chart, but very similar situation over in the energy sector. We continue to hold that support, but we keep refusing to build any momentum off of it either. That's going to be a pretty important price. As long as it holds, it holds, and I'll definitely respect it. If that breaks, that certainly would be a bearish signal. And again, while I'm never going to pretend I know that support's going to break tomorrow, whenever I'm close enough that it could, whether it's support or resistance, I'm definitely going to be paying attention. So continue to monitor that price. Very boring week, really. There's been some volatility, but really haven't done anything as we try to figure out, can we trust this support, or is this support going to finally break? Well, we don't know the answer to that question today. Over in the financial sector, quite a bit of selling over there. We are getting pretty close to support over here as well. In many ways, kind of looks like our broad market, where we now have yesterday's high as resistance, the low of last week as support, and we're kind of in the middle, although we do kind of have this little swing support from days gone by kind of holding us up. Much like the material sector, we do have quite a bit of room to the downside if we give out. So keep monitoring how it performs at that support level. Again, it may not fill it, but when there's never a reason for it not to, I'm going to be very leery, at least if I'm a bull, and very open to bearish ideas if that support breaks. Over in industrials, very similar to our materials, hanging by a thread at support, did respond reasonably well off of the lows here today for whatever that's worth. It's better than not, I suppose. But again, a lot of room to the downside. If we see things break, there's room, all over the place in a lot of stocks for them to move to the downside if they start failing at these support levels that they put in last week. So we're not there yet, but those support levels are going to be very important as we move into next week. Technology, of course, pretty rough day as the NASDAQ was our worst performing index. We did close above the 200, but again, it's one of those things. Coach Mark and I were talking a little bit before I hopped off of the recap and complaining that, from a daily point of view, we're just a long ways away from support and resistance. A lot of these charts aren't looking very clean or pretty right now on the daily time frame. But we do kind of have a very similar situation to our NASDAQ over here in the technology sector. Interesting development, I think, in staples here today. They did carry on yesterday's momentum. Of course, yesterday we pushed through that breakdown point pretty substantially, carried that momentum into the open today, really ran up quite significantly, as you can kind of see, topped up just about the 50-day moving average before really reversing course and selling off pretty dramatically throughout most of the rest of the day. I do think we can look at this a couple of ways. We can either look at it, let's hold this breakout point and we can remain, we can be, bullish. I'm not really feeling that way, although I understand that side of things. As long as that breakout point holds, I'm not bearish. If it breaks, today's intraday low tomorrow, I think you could look at that as a fairly aggressive sell signal from a bearish point of view, of course. Pretty aggressive, not for everybody. I think a more conservative approach would be breaking down back below that 200 or yesterday's low point. So I do think there still is potentially some bearish opportunities if we fail to hold this rally back into this breakdown point. Obviously, if it holds, I shouldn't be surprised, though, right? It did hold today. It broke yesterday, and that's not an easy thing to do. So I get people who are maybe trusting it a little bit more than I am. I'm being very picky, and I've not liked this for a bit, and I'm not changing my opinion. I'm changing my willingness, but not my opinion, at least based off of how it looks today. So watch how we respond to today's low tomorrow. If we challenge that, we may very well not. But I do think if we break that, there could be at least a little bit of short-term selling over in that department. Utilities, pretty flat, held their own, but really another back and forth day, kind of volatile over there as well. Nothing really substantially has changed. We're kind of in the middle of support and resistance right now. Support down here, resistance up here, kind of in the middle. Overall, I think the sentiment does remain bullish, but it does seem like at least a little bit of excitement, and willingness to jump into utilities that we saw, in the last couple of weeks has died down, at least for right now. Moving over into healthcare, really had a very big red candle here today. We did respond pretty nicely off of the lows as buyers, took some sweet deals, I guess, on the intraday bottom and ran it up a little bit before the close. I like what I see here on this sector, and this chart, I guess is a better way to put it, because I can now, from at least a bullish point of view, I can now kind of think about a potential break. If I can break through this top, this resistance that I formed here yesterday, then that could be a signal from a bullish point of view. This does continue to be one of my areas that I am most comfortable with as a bull, although, like I said, I'm very picky. I'm not going to chase around in this market because no reason to. It'll simmer down. It'll be more comfortable before we know it. Whether that's next week, next month, next year, it'll happen. It always does. Moving into the discretionary, pretty rough day over there. Of course, this has been one of those areas that's been struggling before the sell-off, and really it never kind of caught any footing on the intraday, closing very close to the lows, back below the 200-day moving average. Again, hanging out somewhere between support and resistance. Still a little bit of downside potential as we work to support. So I certainly can see some bearish opportunities there. I really do. And this is one thing that I am noticing over the last couple of days of trading. We've now formed these resistance levels. 2 days ago, we didn't know where resistance was. We were basically looking at breakdown points, right? Now we've actually established some swing levels of resistance. So from a, whether we're managing bearish trades, looking for new bearish trades, looking at potential bullish opportunities, now we know, well, it shouldn't go above these resistance levels, right? So if it does, that could give me a buying opportunity. That could be a place to plan on managing or exiting out of a short trade. So while maybe it's not been the greatest thing ever, I am appreciative of the last couple of days of trading, because now we know where our swing resistance is, where a couple of days ago, we did not have that information just yet, right? We were basically looking at previous breakdown points primarily as resistance. Over in the real estate sector, we ran up, challenged the 200-day moving average briefly today before kind of giving out, closing relatively flat on the day. I think, and again, this is just me, you don't ever have to agree with anything I say, but I think that this is shaping up for some interesting bearish retracements going into next week. I could see some aggressive entries tomorrow if we see downward movement, but I really think the entries are going to be better suited for next week entries. I'm hoping for a flat day tomorrow, at least in the real estate sector, because I am seeing some interesting things shaping up for bearish retracements over there. We're seeing a lot of indecision as we start to run into some problem areas, right? Again, another one of those areas that was really struggling before the market was really struggling, now challenging previous support, the 200-day moving average. Haven't really seen that downward movement just yet, but we're not seeing the bulls with nearly as much oomph these days after a couple nice days to kick the week off. And lastly, over in our communication services, continues to be a pretty volatile sector. As Activision Blizzard was down big today, Netflix down big today. Pretty rough day over in that sector, and it also continues to be a pretty volatile area. And I think part of that is just the type of companies that are in that sector, and I think part of it is it's kind of a new thing, at least as a collective sector, right? This just came out, the sector change just happened recently, and I think it's trying to kind of find its footing. People are, and I'll be the first to admit, I'm still trying to figure it out. There's not a ton of history, and it's always harder to figure things out that don't have a ton of history. So I think part of it is people trying to figure out the sector as a whole. Another part of it is some of the big names in there really have been volatile. And of course, today, things like Netflix and Activision Blizzard were down pretty good. So that didn't help its cause. So that's where we find ourselves after another volatile day. Again, over in the stock market, I think we just have to continue to plan accordingly. It's going to be volatile. What does that mean exactly for you? Might be a little different for you. For me, looking at shorter time frames, being quicker with the stop loss, being willing to take a small profit instead of going after a bigger one, using credit type of strategies, out of the money credit spreads, for example, to take advantage of the trades set up support resistance levels that I'm seeing without getting beat up on the day-to-day volatility. That might not mean the exact same thing for you, and that's okay. But we do have to, when the market's more volatile, we can't change it. And we need to make sure that we are doing things in our trading that fit within that market, right? Things that we were doing even a month ago just aren't working quite as well because of the increased volatility in the market. But certain other things, like intraday trading, is going a lot better, at least for from my end, I think, because of that volatility. So don't be afraid to shift your strategies, shift your management techniques if the market kind of dictates it. Because again, we can't change the market. We can only change how we respond to it. Moving over into gold, another day, another close above the breakout point without really getting the momentum going. Kind of started cooking a little bit today, got into the mid 1230s, kind of closing about the same place it's been closing the last few trading days. Breakout continues to hold, hasn't taken off yet, of course. But again, as long as that breakout point holds, I think we look at this the same way as a potential bullish signal. Certainly not a bearish one, at least until that breakout point fails, if that's the way it's in fact decides to play out. But really not a whole lot has changed in the chart. As gold has basically been boring. We've had one exciting day in months, right? In the last couple of months, we had a big breakdown day, we had a big breakout day, and we've had a whole bunch of bland days. And that's what gold is right now. Over on silver, another kind of flat day, closing above the 50-day moving average. Interestingly, for those of you who use this as a signal, you are seeing the 20-period moving average crossing the 50, which of course some traders do use as a buy signal, and that's certainly a positive. I'm not a huge user of that signal personally, but I don't disagree with it necessarily. A little bit of a buy signal there. Most importantly, holding its own. Again, I do personally think that right now, instead of trying to mess around in the middle, if you will, I personally do think that breaking 15 is the signal that I want, at least when it comes to silver. But I can understand it. Wouldn't be terribly surprised if we can break today's high at any point in time, today's high tomorrow type of stuff. If we actually get some buyers taking another run at that resistance level, a little bit of a hammer type of candle today with a moving average crossover, holding the 50 yet again, I can definitely see the bullish case for it. I'm just not there personally. Over in the dollar, built off of yesterday's momentum pretty nicely as we continue to see the dollar appreciate, working into a previous swing high. Certainly not as big of a deal from a technical point of view as some of these longer levels of resistance that we've had to fight with before. But of course, it is always worth noting resistance because resistance is there and we need to respect it. But really another strong carryover from yesterday, from the hammer a few days ago. So looking pretty strong over there. Keep an eye on that resistance level. If that breaks, there is a little more upside room though. So that's definitely encouraging. Over in natural gas, a very volatile day. And then I was thinking about, natural gas a little earlier and how quick people have been to buy really any excuse they can find, how hot it's been. And personally, I think it's about time to be a little pickier with it. We're starting to see some potential resistance forming up through here. We're not, seeing quite as much momentum when buyers do step back into it. Now, that's not to say that I'm bearish by any means. But I do think that it kind of looks like the momentum might be, at least right now, dying down a little bit. The best way to protect myself, because I've been wrong many times and I'll be wrong many more, is to look at it from a breakout. If I do break out, that's a very good sign of momentum and I can feel good about it again. Any pullbacks I'm going to be pretty picky on though. At least that's how I am going to be viewing natural gas in the days to come. But watch those tops. We are kind of starting to develop, but again, haven't done anything wrong. Just because we don't scream up the charts doesn't mean we've done anything wrong, right? As long as we hold this swing low from last week, I will continue to maintain an overall bullish posture. But I do think that, just kind of the way it's been behaving seems like, people aren't quite as willing to use any excuse they can get to buy it and hold on to it. At least that's how I'm reading that right now. And lastly, of course, our friends over in crude did get out here. We did yesterday closed right above 70. We talked about that as a very important price point. I think it was. Of course, it pushed through that today, broke the intraday low, and gave us a pretty good selling day. Above 70, like I said, I was comfortable saying I was bullish. Below it, I am not comfortable. Now we'll get back above it. I can change my mind right now. I don't really see any great reason to think that crude's going to turn around tomorrow. We've broken what I at least believe is a fairly significant level of support. We don't really have a lot. We've got a little bit down here, but everything's pretty much lining up with its 200-day moving average. That's what I will be watching for. as the next potential buy zone, at least as the chart looks right now. For me, that's how I would take a look at crude. I can understand people going bearish on it right now, showing a lot of weakness, breaking some support. Really, there's not any strong support for another little ways, but we're not that far away from testing that 200-day moving average. So I don't really know that this is a great bearish opportunity. I get the bearish argument, though. I just don't know how great of an opportunity it is from at least a trader's perspective. I think I can pass on going short. If you went short, you probably went short when it broke that intraday low from yesterday. Or you were already short because you were bearish, and rightfully so. In hindsight, should have been bearish on it. But as new trades for tomorrow, I don't really see there a ton of room. We already know last time it tested that 200, that was a really solid support bounce. And while I don't adhere to it, has to bounce off the 200-day moving average, I'm definitely going to respect that average. I've seen that plenty of times. Never going to be surprised if that's where things turn around. So that, ladies and gentlemen, is where we find ourselves after another very volatile day in the market. Like I said, until volatility stops, I think we should just assume that it's going to continue. I expect tomorrow to be another volatile day. Maybe I'm wrong, but I think right now, until that changes, that's the proper way to look at the overall market and act accordingly. That can be taking smaller position sizes, changing your strategy, sitting it out. No one says you have to make a trade tomorrow, right? And if you don't want to, that's okay. Perfectly reasonable to scale your position size down, shorten your time frame, change your, how aggressively you manage your stop loss. Lots of ways that we can handle it. We just need to, we definitely need to respect the volatility. Whether we like it or not, it is currently here until it's not. So with that, ladies and gentlemen, as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the YouTube channel and hit that notification bell to be alerted to any new videos that we're launching over here. We always like to share those with you, and be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're keeping an eye on throughout the course of the market day. If you enjoyed the market recap, it is always helpful and appreciated if you give it a thumbs up to let us know that we are on the right track here. And with that, get the heck out of here. Happy trading, and I will see you in the next one.